Good morning and welcome to Equity Story, Thursday, the 4th of May. And I'm here by myself, so please bear with me. First of all, the disclaimer in front of you, we're going to all just basically talk about every stock that we can in general terms only. So it's going to be all about fundamentals and technicals as per usual. So let's look at what actually happened last night, which wasn't a great night for US again, and that's on the back of pretty much looking at the interest rates, which in the US went up. Unfortunately, as you can obviously imagine, we've had RBA move up rates here, which shocked the market. Less, I suppose, shock in the US with the movement in rates. They're a little bit different position, but still, the markets probably didn't take it very well. Moved the market down and finished on its lows for the day. I think just generally feeling is that the interest rates cycle is still probably not quite finished, and they talk about the interest rate cycle going down or getting reversed, which was quite, I suppose, maybe in the forefront of people's mind by the end of the year. It's probably not going to happen until maybe next year or the year before. So I think the further that we go with these interest rates, the greater the probability that we're going to have a recession, and which obviously doesn't augur well for a lot of things like the stock market and so on. So, at the moment, a bit of turbulence. We'll see how it all ends, but right now, it's not fantastic. That's for sure. All right. What I'm going to have a look at now is I'm going to see obviously in the US what we got, what's happening. So let's look at the actual market wrap. So let's go through that. And I will find that for you one sec. So we're going to share the screen and come up with this information here. And we've got, so you can see last night, we've got S&P, Dow Jones, NASDAQ all down by about 1%. Of course, that's translating to Australia as well, which where I think the SPY was down about 30-something points. Interestingly enough, of course, gold was pretty strong, right? We'll have a look at gold in a sec. But that's the place probably where you're going to be playing at the moment. But everything else like crude oil, copper, pretty much everything was weak. So for me, not a great at the moment market to trade, unless obviously you're playing with gold. The other thing I suppose we can have a look at is uranium, and I'll show you uranium chart in a sec. But it's interesting; it's actually crossed my threshold where I think it could go for a little bit of a gallop, and I'll show you why. So you can see most of the sectors were down last night. We've got Apple reporting tonight. So that will be, I think, the last of the big ones reporting. So that could also decide where the market goes tonight. So it's just the volatility, turbulence, not an easy week for sure. It started with the RBA shocking the market. So we just got to, bear it, I suppose. That's the market for you. What other things happened last night? So we've got Eli Lilly's Alzheimer's treatment, slow disease progression clinical trials. So that was a big one for the biotechs out there, and Alzheimer's, of course, and more banking wars, I suppose. That's the other, I suppose, clear danger or clear risk we've got at the moment is that potentially that banking crisis we have in the US is going to go from one bank to the next. All the regionals are probably nervous. That's what I'm saying. And it doesn't take much. You've got the shorters attacking that bank, and unfortunately, when you see your share price falling, right, of the bank you may be banking with, what do? Natural reaction is to withdraw your money. And that's what's happened to the other banks. It's not about the bank's going to crash because of that bad. It's because people are withdrawing the money. And that's the end of that. It can happen in Australia too. If everyone, say, for example, the CBA decided to withdraw money all at the same time, CBA would crash as well and probably go bankrupt. So it's a possibility, of course, but at the moment the contagion is slow, but it is spreading slowly amongst the regional banks in the US. So we're just got to be very careful with what we're actually investing into and just watching the market at the end of the day. So right now, volatility. All right, let's go through and I'll show you the actual environment for the commodities. So you can see gold, and it's at 2055. I'll show you the chart. And that looks very, very good. That's going to be on a weekly. Look at that. That's actually broken out now. Of course, it needs to stay like that by the end of the week, but that's broken out and it's looking very, very good for the traders out there, for sure. Now, let's look at And that probably is going to keep going like this. I know I can't see that stopping because of that issues we've got in the US. So let's look at uranium. Like I said, look at that one. It's the only one that's actually not, that's not red in a way. And like I said, look at that. It's just gone cross by the 53.38, 53.70. If it's not going to do the week, that's very bullish. So let's go put it on the weekly. And that's why I like it. Look at that little move up here. It can break out that 53.70, 54. You might get up to maybe 58, 59. That's going to maybe put a few of the uranium stocks in the spotlight. So, again, the old BOE, PDNs of the world could have a little bit of a run. We're going to have a look at those charts in a sec. Let's switch screens. I want to show you some announcements from this morning. So let's look at, first of all, IKE. Hope you can see that in front of you. You've got a company that's come up with some strong reporting today, strong results. It was actually looking very, very good about February odd. Then it just came back under the trend line, so it's not a trade at the moment. But an update today was pretty good, with the view that maybe the next quarter is not going to be as strong as the previous quarter. Understandably, sometimes you get really, really good quarters, especially when you're ramping up your revenue profile. But generally speaking, it's pretty good. So it just needs to get over that 81 cents, 82 cents before we have a trade again. But I just wanted to mention, and just so you can put it on your watch list, because they're doing very well. But 30 million in revenues. These guys are in not maintenance, but in monitoring and analysis of the power lines, the power infrastructure in the US. So very interesting space, and they're making inroads. So well done to them. Let's look at NAB. This is interesting because, you've got a bank that's come up with a $4 billion profit, and down she goes. So obviously $4 billion is not enough. It's probably going to go down like a sack of potatoes, with all the mums and dads who are, probably suffering for the interest rate rises, yet they are, $4 billion profit, great. It's just hard to sort of understand how it all works, how they make the money, where I suppose the little guys are not, they're probably going backwards, yet these guys are going forwards. It is frustrating, but it is what it is. In a higher rate interest environment, they should be doing better. They should be getting better margins out of it. But saying that, it's, banks are banks, the expectations were probably for much better. They didn't quite deliver it still. It looks decent. However, as an investor, I suppose, we've talked about over and over again, would you be in this as a trade? No, you wouldn't. Would you be holding these as dividend stocks? Possibly one or two, but it needs to still be within some sort of a trade range, right? And this isn't now today. And I wouldn't panic today because it could bounce back. But this is probably my last line of defense. Maybe $27 will be my last line of defense. So it's now below that, 26.30. Maybe there's an opportunity. You just never know. It could bounce back over the next few days, but the market's a pretty savage reaction, 8.7% down. That's just crazy. So let's watch what happens there. If you're in this for a dividend, wait till Friday and see what happens. So just wait for the big brokers to come up with some of the reports. It could bounce back. So no panic yet, but it doesn't look great for the first bank that's come out. And that's probably dragging for sure on our markets in a sec. I'm just going to have a look at some of the other banks and how they're faring. And I bet they're probably going to be dragged down by this NAB result. So that's the first one. NAB's come through. We're going to have ANZ. We're going to have Westpac reporting. So watch out. We could have more volatility coming through over the next few days, which again, it's just one of these cloud of craziness stocks that could drag the whole market down and potentially affect good-looking trades, right? You might have a good trade that's going quite well, and all of a sudden starting to go backwards. So you probably need to take a profit or just cut your small loss and move on. Let's look at Westpac. Again, probably suffering as a result of NAB. And look at that. All the banks are just looking pretty sick on the back of this NAB result. Really interesting, isn't it? How things can change quickly on a result and on another interest rate rise from RBA, where maybe it's spooking the actual real estate market as well. So 4.4% down. Wow. Okay. Don't panic. Let's see what happens Friday. Let's move on to the next one. Now, this one we're going to add to our upgrades watch list, because remember, we've made a little upgrade watch. We've got about, let me see, about 15 stocks so far. this only been on here not that very long. And I know it's, let me just see, today, it was up today, ACE. It was up today, but now it's a little bit down. So maybe it's the market's dragging it all down. But it came up with a upgrade, right, to its revenues, to its EBITDA line. So one that we're going to add, and we're going to see monitor it over time. At the moment, it's not trending, of course, but you know what? We like the stories that come up with upgrades. So we're going to be seeing that if they possibly can get over that trend line, and maybe there'll be a trade in there if they can deliver another good news over the next couple of months. So definitely worth following, because some of these stocks are doing extremely well. So for sure, even though it's maybe flying the radar at the moment, it could potentially, you know, look pretty good in the next month or two when things settle down again. Let's look at the next one. LYL, it's had a pretty good run. It's come up with a, I suppose, project announcement today. And that's actually chart doesn't look too bad. It's bounced off their pretty aggressive trend line there, which is quite interesting. And really the whole, you know, the chart on the weekly looks excellent. But again, you know, I'd be worried with this markets, how it is at the moment, dragging everything down pretty much. This could potentially be dragged down. Doesn't matter how good the results might be, it might be dragged down. So just keep a really tight stop loss. And, you know, if, like I said, daily probably is my key here. If you didn't get out on this candle here, you're still in this, use that red line for sure. 985 is your last line of defense. Gets it below that, you're out technically, right? So if you're in this stock, use that pretty strong red line. Next one, CCP. Now, CCP come up and reiterated guidance today, right? Which is decent, but in an interest rate environment like we have right now, which is a rising one, generally speaking, when it's pretty much meaning that we're going to probably head into a recession, this is not a great environment for CCP chasing debt to do well, right? Because, of course, the less money around for people to spend on because of recession, they are going to be reluctant to pay off debts, or maybe don't have money to pay off debts. So it's going to be a struggle street for CCP, I'd say. And traditionally, historically, they tend to struggle in this sort of environment. So even though reiterating the guidance, I certainly wouldn't be in it. And you can see it's under trend. So for sure, if I'm in it for some reason, I'd be out. Last one. Now you can see this is a danger, right? You know, we talked about engineering groups. Some of them are going very, very well, coming up with upgrades after upgrades after upgrades. But sometimes, even things are going well, you could get something like this, which is a downgrade. Sudden downgrade without any warning on the back of potential something out of their control, maybe, you know, where you've got delays in certain project or, you know, delivery of money. Some, you know, in a project world, things can happen. This is why it's a high risk game in some of these companies. So you've got to be pretty on the ball. And it doesn't, like I said, doesn't hurt sometimes to take a profit here and there just to protect yourself. Even though the chart's looking great and you might be high-fiving yourself, you know, just be wary. This is a great example of what can happen. Things are going well. You can see ANG beautifully trending up and down on this without any warning, bang. And, you know, it's gone down almost 25%, which is extraordinary, really, on a downgrade and potentially a temporary downgrade. But this is how savage markets are. So you've got to be very, 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 very careful. So in this case, you know, it's below the trend line. If you are trending in this, if it's below the trend line like this, you've got to get out, of course, unfortunately. But maybe just wait till Friday, so tomorrow, and see where it ends up. Maybe hopefully we, you know, makes it well closer to that 32 cents to cut your losses. But that doesn't look great. Downgrades normally for me means a sell. So as you can see, not everything is going to go perfect for us. This is not a story we're trading at the moment, of course, but it's anyone is. I mean, we've got things like, you know, remember, we've got ACF, sorry, where we're maybe looking at that's going quite well, right? I mean, this case could also come up with something similar. You know, we've got the Duratechs of the world. So, you know, there could be one in there which can spook the markets. That just be very, very careful. That's all I'm going to say here. All right, guys, I'm going to leave it here. Hopefully, you're not suffering too much with this markets at the moment. Like I said, it's not a great week. Hopefully, it will get better by Friday or tomorrow, and next week it have a little bit of a rebound. But it's just one of those weeks. We've got to grin and bear it and move on. Have a great day, and I'll see you again tomorrow. Cheers.